Are you planning on buying a home soon as a first-time home buyer or a move-up buyer? One of the biggest things that's going to impact not only your monthly payment, but probably even your decision to buy is balancing both current interest rates and current home prices. I'm Rebecca, the Mortgage Mentor, and we're going to explore both of these topics and how you as a buyer can prepare to meet the market where it is so you don't get left behind, but you don't overpay. Be sure to like, comment, and subscribe so you can stay in touch with all the things that you need to know about buying a home and real estate. One of the most surprising things is the impact that an interest rate can have on your mortgage and can have on your payment. So it does seem very significant. A lot of people really focus on what their down payment is going to be for the home that they're buying, in the sense of, if I put an additional $10,000 down, does that give me a significant advantage as far as what I can afford? And that's because $10,000 is a lot of money. Where rates are trending right now, around 6.5%. Every $10,000 down that you put on your loan, it only saves you about $50 to about $60 a month on your mortgage payment, which seems pretty shocking considering that $10,000 is a lot of money. What does have a big impact is going to be your interest rate. And that's why people will try to focus and get an eighth better or a quarter better in rate. However, the thing that I want you to keep in mind is that while you're focused on that interest rate, you could be missing out on home prices. While a lot of people are focused on and hoping that the market will crash, the actual underlying data of demand for homes and the supply of homes doesn't support it. So what are we going to do about it? One of the biggest things to keep in mind is going to be how to find what you want in the market and how do you balance that out against interest rates that may be higher than what you want. The thing to keep in mind is a 1% drop in interest rates is equal to an about 11% decline in home prices. And that's why a lot of people are trying to wait out this current rate environment. My concern with that is because of, again, limited inventory, home prices are likely to stay stable, if not potentially increase. So you may be better off to go ahead and purchase now with rates the way that they are, if you can afford it, if you can qualify for it. Yes, it might not be what you want, but you can go ahead and lock down that home price. Later, we can improve your rate and make your mortgage more efficient with a refinance. Some loan types can be particularly attractive because you may not even need an appraisal in order to refinance. What that refinance will do is be able to replace your existing mortgage with a new mortgage with a lower rate. Trying to time the market by waiting for rates to drop or home prices to decrease can be risky because really nobody can predict the future of real estate. There are potential downsides for waiting out the market. Interest rates could increase and home prices could increase, which means waiting could mean that you may pay more for the home that you're looking at today. There are benefits to buying now. There's a little bit less competition in the market, so that does give you the opportunity to potentially get a home for a slightly better sales price or have the buyer pay some of your closing costs. Additionally, although rates are higher than they were just a couple years ago, but historically they are not that high. They might be higher than what we want, but people are qualifying for homes every day. And again, if we're looking at the home for now and the rate we can take care of later, that may help with some of your timing. Additionally, with inventory getting close to historic lows, it will create a lot of competition. Even though there are less buyers out in the market right now, you want to make sure that you have every advantage possible to get the home that you actually want. Another strategy that people are using in this balancing or rebalancing market, maybe the home is worth what it's being listed for, but you still want a deal. And the sellers want to sell their house for what they want to sell their house for. They don't want to come off of the price either. A reasonable win-win can be either asking for the seller to contribute to some of your closing costs and or asking them to do what's called a temporary buy down. And that's where for a year up to 3, the seller subsidizes a portion of your mortgage payment, which makes it cheaper as a monthly payment. How that works is, let's say that the current interest rate is 6.5%. and you have what's called a 2-1 buy down. The first year, your payment is going to be as if your rate was 4.5, and then the second year, it will be as if the rate was 5.5. It's not until the third year of making payments that you would be paying on that 6.5%. And what that does is that gives you time for rates to come down and hopefully refinance, while also enjoying the benefits of a lower payment. And how that's funded is by collecting the difference in those payments from the seller up front. Why that tends to feel like a win-win is because you as the buyer will have a lower payment from the start. And it's going to cost less off of the home to realize that lower monthly payment than it would as a price reduction, which means it puts more money in your pocket and more money in the seller's pocket. And that's why it's really important to work with a skilled mortgage professional. And that's because our job is to understand not only what do you want to buy now, what can you afford now, what are your preferences, but where do we go with this? Is this a transitional type of loan? Is this something where it doesn't make a lot of sense to pay points to buy down the rate because we're likely going to be refinancing? So especially in a market like this, you owe it to yourself to work with a professional that's going to give you that level of advice. Again, there's not really a one size fits all of if it's the perfect time to buy. However, if it was a good idea just a few months ago, or maybe even a year ago, it likely is still now. Even though it's become more expensive, if you can qualify for it and if you can afford it, then think of it this way. It can only get better. You can refinance in the future to lower the payment while still being able to lock in today's prices so home prices don't increase further. If you found this video helpful, please subscribe so you can continue getting helpful information on home buying and mortgages. And if you have a question, be sure to leave it in the comments. I am here to help. And if you're ready to start your journey, reach out and we'll get things going.